You know that feeling when someone shows up for you just when you need it most? That's what Uber is all about. Not just a ride or dinner at your door. It's how Uber helps you show up for the moments that matter. Because showing up can turn a tough day around or make a good one even better. Whatever it is, big or small, Uber is on the way. So you can be on yours. Uber, on our way.
Reality radio for a really great future. We're talking real money.
Hello. Welcome to the show. I'm Don. Do I sound better?
You sound so much better. I was so worried about you. I sent out a missing persons report.
I got to tell you, I didn't even turn last week's show into a podcast. It was so awful.
I think the word was haven't heard of a disaster like that since the Titanic. So
I think I've heard you say that before. I'm pretty sure. Hey, I have a question. Oh, yes. By the way, I want to say hello. Welcome to Talking Real Money. I'm Don. That's Tom. We're your hosts. And you can call us with your questions about money matters of all kinds at 855-935-TALK, 855-935-8255. Please do so. Now, I have a question for my co-host and business partner, Tom. All right. Last week, I had a little family crisis.
Yes, you did.
I was away from the markets for a while.
Yeah.
I leave you alone to watch them. I ask you to please take good care of the markets. They're fragile. And look what you did.
Yeah.
What did you do? You broke it on Friday.
I know. I think the Corona finally got to the stock sellers or something.
I told you, don't drink Corona during market hours.
Bad beer and lower markets. No, I mean, wow.
It was awful.
It's an interesting point of discussion, actually, because, number one, there's a lot of people that say, so goes January, so goes the year for stocks.
Yeah,
which is so silly.
That's like the Super Bowl indicator.
Yeah, it is 1/12 of the year, so I guess there's some aspect of that. And the S&P 500 ended up down for the month about 0.5%. A globally diversified portfolio lost a little over 2% for the month. Big deal. But 600 points is scary, and I love this. I hate it, but I love it because I find it fascinating. I have
a love-hate relationship with this.
So what do you read about in the financial media for the last 24 hours? The rush to safety. Where should I put my money now? Because stocks are going down. First of all, they're not going anywhere. They went. I don't know what the futures are for Monday morning. The rush to safety. How do I protect myself now that the stock market has finally turned and is heading lower?
Yeah, except we don't know for how long it's going to go lower.
Yeah, I'm being facetious, as you know. So if you want to call and ask us...
Really? You facetious?
Exactly.
Actually, I can tell you where the futures are.
Yeah, where are they now?
They're up slightly.
Okay, there we go. The rebound.
There you go.
Is it a dead cat bounce or is it an actual rebound? We don't know yet. We'll find out.
I hate that term, too. It's like, who would bounce a dead cat?
I'm not a cat guy, so
dead,
I'm not going to say
so it doesn't
anything,
really care.
Yeah, all right.
Well, yeah, although I heard about you and the cat in the Instant Pot.
Yeah.
I'm just not going to say any more.
Thank you. By the way, I will say publicly thank you for your very kind birthday gift. No, I'm looking forward to it. That's a great gift. I like.
I forgot to send you the recipe, though.
That's okay. I can go online and find recipes.
I got to tell you, I made an Instant Pot balsamic pork loin that was, sorry, all of you vegans, that was to die for.
That sounds like a good one for the Super Bowl tomorrow, but I already have so much food that I shouldn't add to it. Be disgusting. So
I'd be there, but I can't be there.
I might put a Kansas City Chiefs fan in the pot though and turn it up high. Who knows?
Yeah,
so
that I think you'd want to do. It's
exactly.
Tom is not a Kansas City Chiefs fan because he's a Raiders fan. Sadly,
I would probably rather be a Chiefs fan for the last 10 years, but
absolutely
not going to happen.
Hey, give us a call, 855-935-TALK, 855-935-8255, because we want to do one thing on this program, and what? Okay, we want to do two things, maybe three things, but two. One that's the most important.
Yes.
We want to entertain you, yes, but our real goal is to truly educate you. Not educate you in what will make us the most money, as is the case with, I don't know, somewhere around 98% of the financial talk radio programs in America. I'm guessing, but I think that's reasonably accurate. We want to actually help you get on the path to a better future. Am I correct?
You're
Mr.
absolutely right. And here's the thing. So back to where we started the program. For those of you who are shook up, who are nervous, who are all of Twitter about a 600-point decline, which sounds like a lot, but when you're trading it somewhere around, 30,000, it really isn't. But maybe it is. When we come back, we'll tell you where people are telling you to put your safe money.
Oh.
And it's a pretty sad moment. But you let us know how we can help you.
There are some dangerous places to go with your money out there. Avoid them and call us before you get into them at 855-935-TALK.
Tom and Don are talking real money.
Do you know what your investment risk tolerance is? Take our free no-obligation risk quiz at TalkingRealMoney.com.
For your real life and real future, Tom and Don are talking real money.
Welcome to the show that helps you make more sense of your dough. I'm Don McDonald. You can call us at 855-935-TALK, 855-935-8255. Before I get to the topic at hand, this is an important message for all of you who might be thinking about going to Retire Meet 2020.
3 weeks from today. 3 weeks from today. Did I say that? 3 weeks from today? 21
3
days
weeks from today?
Okay. I'll mention that. Yeah.
And if you're going to use the discount code, we use Eventbrite for our events.
Yeah, which
because
is
it's
very good.
Good.
Yeah.
It's great, except for one little tiny issue. It's hard to find the place to enter the discount code.
Did they do that on purpose? Is that one of those I got to read the fine print kind of things?
It's like, I don't know why they hide it, but the discount code is on the page. You go to select the tickets you want. So however many tickets you want.
So when you pick the tickets, you got to do it on that page.
On that page, there's a link.
Let's go back. You go to retiremeet.com with 2 E's.
All right. Hold
Let's
on.
make it simple.
I'm going to start at the very beginning.
This is 3 weeks.
I'm typing it in.
If you're thinking of coming, get your tickets right now. We have a morning session. For those of you like me, like to get up in the morning, and then those like Don who don't even like to see the light of day till about 11:30 or so.
Right.
We have an afternoon session. So
that's why we're doing. Tom will be there in the morning. I'm sleeping in,
and you'll show up. They really be sleeping in. So come to one of the other.
I'm walking through it.
Okay, retiremeet.com.
Go to retiremeet.com,
yes.
retiremeet.com.
And
then click on one of the buttons that says Order Tickets, anywhere on the page.
Yep.
That will take you to Eventbrite, where you'll go to the Retire Meet 2020 Eventbrite page.
Yes.
On that page, it says Select a Time. You select a time. A little pop-up pops up.
Can I pick it like I'm 19 years old, like that sort of thing, like a time?
No, not that kind of time. 8 a.m. or 1 p.m. time. Then you click on tickets, and on that page, it says enter promo code.
Which is
That's
Flash.
where you enter the promo code, Flash, F-L-A-S-H. Doesn't matter if it's upper or lowercase. Enter that there. That will reduce the cost of your ticket by $10.
Yeah, we want to see you liberate the giant corporation of more money, so do it. Take advantage of it.
But it's only through Sunday night.
That doesn't come out of our pocket, right?
Well, kind of.
Oh, okay.
But
so,
all right. So there, we've got that settled.
Saturday,
Now,
February 22nd in Bellevue, Paul Merriman, Herb Weisbaum, Paul Lupescu, Don McDonald, et al., Medicare, estate plan, everything about retirement, one spot, 4 hours in the morning, or if you don't not like to get up in the morning, 4 hours in the afternoon. One or the other. You'll love it. So
be like Tom or be like me.
There you go.
You get to choose.
There you go.
All right. 855-935-TALK. That's our phone number. We want to make that really clear. You can use that number to call us live on the show, which is 3 to 5 Eastern on Saturdays or noon to 2 Pacific time, or you can call any other time. But if you want to talk to us live,
like now,
directly, interactively, you call now. All right. There, I did that part. Now, do you have a part you want to do?
Well, I do. We started to talk about stocks and the fact that Friday was a tough day. The Dow Jones Industrial Average lost over 600 points. By the way, the Dow Jones Industrial Average is a crummy...
What was it thinking?
Yeah, it's a crummy measure of stock performance. But all the major indexes were down pretty dramatically. And then the national media starts running all the stories about, well, you better rush to safety. You better figure out where to hide. You better figure out how to protect your money because stocks are going down. Well, first of all, stocks are never going anywhere. They've gone. But your portfolio should always have a balance to it if you don't want to deal with the volatility of just owning stocks, right? I mean, and one of those places...
Well, and that's more than that. If you don't want to be scared by those big declines. That's why we want to preempt your fear by building the right portfolio from the get-go so that you don't get into a situation where you're going, I didn't realize the market was going to go down 50%.
Yeah, which it did in 2008. It did in certain types of portfolios, 2001, 2002, etc. Stocks are volatile. But one place you could hold some of that money would be a thing called bonds. Now, bonds are loans, right? They're IOUs. They don't pay, they haven't paid as much over time as stocks, quite a bit less, actually. But you got to own the right types, right? Because last week it came to my attention that I'd forgotten this mutual fund. It comes up from time to time because it's actively managed. It's, I think, relatively popular among certain stock brokers for selling it.
Because of the yield. It's because of the yield.
Yeah, the interest it's spinning off, which is pretty high, right?
For the 3.07% right now is the SEC yield.
That's
3%.
a lot. That's a lot. And here's the other part that's a lot. The ticker, by the way, is LSB as in boy, D as in Don.
No,
X.
LSBRX. You're looking at the institutional.
Right, the institutional share. This is for us little people like you and I. Here's the well, there's a lot of downsides. You're going to get to the second one in a minute. They charge you 0.9% to manage that money. This is a bond fund. You can go own the Vanguard Total Bond for, I think it's like 6 or 7
100ths of 1%.
Yeah, not 9/10.
Well, a half. Actually, it's about I think it's a half of 1%.
It's way.
No, I take
cheaper.
that back. It's 5/100ths of 1%. 5/100ths.
This is 9/10 of 1%.
Tenths.
Yeah, way more expensive. Almost 20 times more expensive.
Here's the confusion, though, and this is the thing. This is where I really believe there needs to be so much more transparency in this industry, and not through prospectuses or disclosure documents, because this fund is pulling down 3%. So people are saying, I don't care how much you charge. It's just 3%. Wait a minute. How is it yielding 3%? And they're collecting almost 1% in fees every year. How is that possible?
What does the survey say on that one?
I looked at the portfolio.
Yeah, what do they own?
Almost 40% of the portfolio is made up of what they call me junk bond.
Oh, I thought they called you high yield
bond.
to try to trick you.
Oh, no. Well, they call me high yield. But in reality, my friends, you can call me junk. Hey, I'm your friend, junk bond.
Yeah, these are IOUs issued by corporations that may, in good times, be able to pay you back. Very unlikely in poor times. Let me give you a demonstration of that. You remember 2008? It's kind of a tough time. Yeah, most people listening probably could. Man, it was kind of a difficult time, really difficult time. Your bonds should have been the ballast. They should have been the thing holding you in place. Actually, U.S. government bonds made you money in that year. This bond fund lost almost 20% of its value in 2008. That is not a bond portfolio. That is a risky stock-like bond portfolio, not one I'd hold for fixed income. No.
Well, and looking at the portfolio, not only is it's about 50% for triple B or lower, which is really low-quality bonds. I found in there one of their top holdings are 8.5% coupon Brazilian bonds.
What's wrong with the 90-year Argentinian bond where you can get double digits? Come on.
Or you could get Venezuela bonds for like quadruple digits. 855-935-TALK is our number.
Tom and Don are talking real money.
Download the advisor interview form and find out if your advisor's a fiduciary at TalkingRealMoney.com.
Your guides to a really great financial future. Tom and Don are talking real money.
And we do love to talk with you at 855-935-TALK, 855-935-8255. We've got lines open, and somebody just dying to answer the phone over there. Who's answering the phone today, Tom?
I think that's Mitch out there, one of our advisors. So.
Oh, we got Mitch today. All right, Mitch. You get Mitch first.
He's got a. I don't think you can call that jacket yellow. It's like neon. It's like, whoop. Does that thing have an off switch or something? I mean, it is bright, bright, bright. So.
Is it a sport coat that's neon yellow?
No, it's.
I've
like
never seen one of those.
Coat.
Oh, okay.
Here,
all right. He's got his warm. He's got his warm weather gear on.
Yeah, he does.
Is he paying it? He's not paying a bit of attention to us, is he?
As they rarely do around the office, as you know.
As no one ever does, apparently.
Life goes better.
855-935-TALK, 855-935-8255. We're talking about that Loomis Sales Bond Fund with the 3+% yield.
Oh, yeah.
And the reason it has the 3+% yield, that's easy for me to say, is because they stretch for yield. It's called stretching for yield. You take more risk to get more return. But that's the price you're going to pay for higher returns. People don't get that. A 3% return doesn't come without extraordinarily higher risks. When the going rate for short intermediate term treasuries and government paper is about
the 10 years trading at 1.5 or something yesterday.
1.5%.
Yeah. Low.
So if you're going to get double that, you're going to be taking on a lot more risk. There was an article recently in the Wall Street Journal that was discussing one of the places that people are going, and you'll hear them on the radio. I was driving in the car listening to Sirius XM, and I heard an ad for somebody saying, "Well, if you're tired of 1% rates at your bank, well, get into this national real estate fund paying 6.5%."
Is this one of those non-traded things where you can't get your money back?
Non-traded. Real estate, and it's backed by 15 different properties around the country, high quality properties, so it's always safe.
Like malls, like those high quality places,
like malls or office buildings or storage units or whatever.
So, for full disclosure, we do use in our portfolios real estate investment trusts. We use mutual funds that hold REITs, lots of them. And you can get your money the next day.
What percentage of a portfolio would generally be in REITs?
Of the stock portfolio, 10%.
Okay, that's 10% of the stock portion.
Correct.
So if you're 50-50, it's 5% of your portfolio. These guys are suggesting you put all of your IRA in this thing. Put it all in there because it's safe 6.5%.
Yeah, there's no safe 6.5% today. If there were, by the way, there'd be no stock market. Well, I would just put all my money into that. That's a no-brainer.
But that's the appeal of products like this because they can – I don't know how they get away with saying the things that they do. That's the appeal of equity-indexed annuities where they say you can get the return of the stock market even if they're a little honest, even if they're just slightly honest, which is the exception. Oh, don't you? We're just a little honest. Hold on. Wait. You're going to get part of the return of the stock market with no risk. Yeah,
Which part?
Yeah,
I want
the big part. I don't want that little part.
Big part. Yeah.
Generally, you get the little part.
You don't want non-traded REITs. You don't want to change. REITs should not be exchanged for bonds. Bonds. The idea there is the ballast, right? The stability. REITs are not that. So do not trade one for the other.
But the problem is investors are looking for for some vehicle that generates that 4 or 5% income stream that they feel they need to have, and they probably do, in retirement.
Then you need to have some in equities, like stocks or equities, and some in bonds. That's been the better way to provide.
The argument's going to be, but I can't take the risk of the stock market. So where can I get 4% with no risk? The problem is Wall Street's going to say,
we got an idea.
We'll find a way to get it for you.
Yeah.
We'll find a way. Because they figure they're going to be out of the business before you figure out their way didn't work the way they said it would. 855-935-TALK.
Tom and Don are talking real money.
It may not be the sexiest website in the world, but it's your one-stop shop for real money information. TalkingRealMoney.com.
Reality radio for a really great future. talking real money.
Here's a wonderful opportunity for you to get through to the show and call and ask your questions about money matters of all kinds, about the things that you spend money on, or how you save it or spend it, or putting it away for kids or for your retirement, how you invested, people who've ripped you off, all of that. Here is a golden opportunity, because apparently the pregame has started for the Super Bowl.
It's on.
The pregame party has started at most people's houses already. Tom's gets underway in just about an hour and a half.
Well, it does, actually.
Well, you had a show in the way.
I had the whole gang coming tonight. And by the way, we worked on never made this before, pizza bread last night. Still rising. That's for tomorrow, too.
Wait a minute. Isn't the stuff that's under a pizza the
I know,
pizza
but
bread?
in this case, what you do is you make a loaf of bread, but you put all the stuff inside the bread, then you bake it.
Wait a minute.
I've
Isn't
never done
that
before.
called a stromboli or
I don't know. That's a different thing. Yeah, stromboli.
Really?
That's what you have when something passes through that artery near your heart. I think that's a little different.
Don't even joke about that.
Okay, that's a little too close to home.
It's a little close to home.
So the party's on, but the party should not be on for you. You should be listening, getting this right.
Right.
Yeah. Okay.
Or there's nothing better
Oh, no.
than a little money conversation
Oh, God.
to get the party started.
Yeah, especially when it comes to those athletes that just do such a great job on the field, but the moment they step off it and start discussing other matters, especially finances and investments, I just, okay, I have a lot of respect for Richard Sherman because he's a guy who bet on himself when he went to the Niners.
Wait a minute.
He's in the game tomorrow.
Didn't he used to be in Seattle?
Yes, he was in Seattle.
What's he doing down there?
He's down there because the Seahawks didn't want to sign him to another big deal. And he put a lot of incentives in his new contract with the Niners, and he's earning them. He's going to. I think the whole deal's worth like $35 million. I mean, good for him. I'm very proud of him for that. Bet on yourself, and it worked out. Here's the part I'm not so proud of. He once said he didn't invest in stocks because they were too risky. Instead, he owns 3 Wingstop franchises. Now, apparently, I know
that's not risky.
Well, no, I know he went to Stanford, but apparently he either skipped out on the econ day or something, or wasn't paying attention, or was in rehab. I don't know. But he's back in the media again because they're asking him, what about your investments? What should you invest in? Well, he does use mutual funds, he says now, and he also invests like a company like Tesla that he bought for $35 a share and sold at $85 or $90. He's also in Body Armor.
Wait a minute. Body Armor?
Yeah,
is
that's
that
a company.
like Under Armour?
Yeah,
or
I think it kinda
True
is.
Body Armor?
That's a good question.
Well, there's Under Armour, which is like, sports stuff, but then Body Armor, that's the stuff that cops in the military
I don't
wear.
know. It's actually a company. I'd have to look it up. I didn't look that one up, but he's also
I'm looking it up now.
He's also in Bitcoin.
Okay, I have a story about Bitcoin a little later.
All right.
Yeah, remind me of that.
And he's in a company called Visus, which you probably don't know because it's privately held. You and I can't invest in it.
I know it. It's in Seattle.
Yep.
It's in the Seattle area. They make the new helmets.
Yeah.
Except they're not right now.
It's basically, and I think I can publicly say this, almost bankrupt.
Yeah,
it is not working out well for. Now, but here's the. He invests.
I found out what Body Armor is.
Yeah. Okay.
Oh, you should know this.
I should.
It's the official sports drink of the MLS.
Oh, well, I guess I don't. My official sports drink for watching an MLS game is not that. Let's just go there.
Not Body Armor.
That's not what I'm drinking. Here's the thing, okay? Here's where I really struggle with Richard Sherman and then another guy that you probably have heard of called Shaq O'Neal. He invests in things that he knows. This is what they think this is what Warren Buffett has said. You stick to what you know. Warren Buffett doesn't say that. Warren Buffett says own an index fund. So Shaquille O'Neal has invested in Apple. Okay, that makes sense. 24-hour fitness. But his real favorite?
Oh, this is going to be great. Now think about Shaquille O'Neal, but before he gives you the punchline, you remember how big he is. He's not just tall; he's wide too. A little.
He's going to get wider if he eats the product.
Go ahead. What did he invest in?
Krispy Kreme, because it's, in his words, a fabulous donut, which is true. It's a great donut. Now I don't know much about
want when you own it.
I don't know much about trends, but if I was going to bet against something, I would bet against donuts.
You think long term?
I think because I think that's one of the things people are going to say. It's killed
Although
me.
I heard they were thinking about rolling out a spinach and carrot donut.
It's all green. You don't. Motley Fool used to say the same thing. Buy what you know. You don't know what's going on.
Peter Lynch said that.
You don't know what's going on at Starbucks. You have no idea what they're doing at Tesla. You don't. They don't know either. By the way, that's phony baloney malarkey.
No, as a matter of fact, people on the inside have made bad investments in their own companies. This is really a bad way to invest. It's a good way to gamble, maybe, if you've got lots of money. Give us a call, 855-935-TALK.
Tom and Don are talking real money.
Just about everything you need to know about money can be found at our website, TalkingRealMoney.com.
For your real life and real future, Tom and Don are talking real money.
And let me share that little phone number with you again, where you can, dial, hit those little buttons, dial. Dial is such an anachronistic phrase, too.
Nobody dials anymore.
I still say, well, I'm going to go tape that, or like a show, or you're not taping anything. You're putting little digital dots on a chip. And you're not dialing, you're pushing buttons, calling 855-935-TALK, 855-935-8255 to talk money matters. You mentioned that Richard Sherman invests in Bitcoin.
Or has invested. He may not be anymore. I don't know. He may be like everybody else in Bitcoin, can't get his money back. I don't know.
Well, you can get your money.
Not always.
But
There's a guy here in Bellevue that's trying to get hit that he says was stolen from anyway. So.
Oh, wow. Okay. It can be stolen.
Right.
That's what I want to talk about. Yeah. There was an article last week in the New York Times, and its headline was, Bitcoin has lost steam, but criminals still love it. Now, I seem to remember someone saying quite some time ago, I got all the little crypto freaks freaked out at me and yelling at me and telling me I was crazy. And I said, crypto is great for crime, and that's all it's good for. Well, last year, the amount of crypto used on the dark web, they actually have a way to track this, reached an all-time high of $601 million for crimes on the dark web. And get this, $3.5 billion was stolen from people like that guy.
Yeah.
Was used for ransomware and those kind. $3.5 billion in Bitcoin was stolen from people.
Really?
Holy cow!
So how do they do that?
They trick you out of it, or like the ransomware where they'll shut down your computer system at work and they'll say you give us $500,000 in Bitcoin and we'll turn it back on. This is Bitcoin. It's got no. If you're investing in Bitcoin, I don't get it. I don't get it, and I don't think you get it either. I think you're doing it because everybody else is doing it, and you need to stop it. Really, seriously. 855-935-TALK. That's our number, 855-935-8255. I'd love it if they'd call me and tell me I'm wrong.
It's been a while.
But they don't want to argue it with me.
I know. It's been a couple of years when the whole craze was there. Long time. They called us and told us we were old-fashioned.
We are old-fashioned.
We're not old-fashioned. We're extremely old. We're from the building that burned down before they built the old building. Come on.
Tom was the originator of the term Luddite. He actually... he was the very first Luddite in Ludville.
That hurts.
It's true. We got to go to the phones, except I lost the name.
Kieran.
Kieran, welcome to Talking Real Money.
Hey, guys.
Hey.
Thanks for taking my call.
My pleasure.
So I am kind of in a dilemma right now. So I live up in Mill Creek. We have a mortgage and all that stuff, but I'm wanting to see if we can actually buy a house rather than buying a house because it's stupid crazy and they charge an arm and a leg, especially if you're going to a new home builder and whatnot. So I figured I'll buy a piece of land and build a house on it because there are lots of custom home builders where for the same price you can either get a double the size or half the price for the same size.
Okay.
But my question is, I am not sure how to go by doing that when you already have a mortgage. And when is it like a second loan that is being taken, or am I paying two payments? I'm not really.
You will.
Sure.
Well, no. What you can often do, banks will float what are called construction loans. In some cases, in fact, in many cases, it's an interest-only loan. In some cases, they will just accrue the interest, and they have a lien on the property and a lien on whatever is built. And it's sort of a bridge loan to bridge you over through that, because they know it's going to be a limited amount of time. They know, and they'll set a limit. They'll say you have 1 year over which to pay this loan back.
And what's their collateral?
The land and any construction that takes place on the land over that time. And they may also ask for collateral in the form of a second deed of trust on your home.
That's what I think the more likely is.
Yeah, but you will be able to get a loan. I mean, you should. You never say will.
But if you don't have any equity in your current home, you might not be able to.
Right, if you don't have any equity at all. But even then, sometimes they'll lend on it because of the fact that, particularly if it's a builder who works with a particular lender, and a lot of these custom builders do, they can get you a construction loan to tide you over.
Good point. Kieran, thanks for the call, and hope that helps. Want to go back to the phones?
Sure, I love going to the phones.
Yeah. Better than hearing the sound of your voice all the time.
Exactly. I just have all my screens taken because I can't see anything. So.
Vicky joins us on Talking Real Money. Hello, Vicky.
Hey, good morning, gentlemen. How are you?
Very well. How can we help you?
Well, I hate to admit it, but I was, long story short, I was married for over 25 years and was not savvy about our investments and what was going on, kind of let my ex-husband take care of that. And now I find myself in a situation where I'm backpedaling and trying to, feel like I have some control over the situation. I did end up with half of our 401k, and right now it's all in Fidelity, and I have it in 3 different what do you call it?
Mutual funds.
Thank you. I'm showing my
that's all right.
my expertise here, and I just wanted to know. And I am 62, so this is a late, trying to then regroup and recoup. Was a full-time mom, still looking for employment at this point in time, just to add more to this. But it isn't a huge amount of money by some people's standards. I'm sure it would feel like it, but in the end, I started out with about just under $300,000 at $286 as of March of this year, or last year, excuse me, and then was topping off at about $313, and then of course last week. It's like,
you don't care week to week. Don't look at it that regularly.
No, okay. No. So I'm just wondering if the 3 funds I have it in are the best place for them to be at my age, because I really don't, if the market tanks or something like that happens, I don't have a lot of years to recoup.
Yeah, by the way, let's go on the record first and say 62 ain't that old.
Yeah, because Tom just turned 62 yesterday, so that's why he's saying that.
Day before, but who's counting?
I don't feel old.
No, okay, good. You sound young. Okay, real quickly, give us the funds if you can.
Sure. FPURX.
FPURX.
Fidelity Puritan. Fidelity
Puritan Fund. Okay. All right.
And then the third one is FASGX.
FASGX. I missed the second one.
I missed the second one too.
FBALX.
FBALX.
It's balanced.
All right. So, wow. These these are pretty expensive funds. 2, they're actively managed funds.
Wait, so is this the Franklin Managed Income Fund?
No. Which one? What was the middle one?
FBALX. My bad.
Yeah, see, you're just not as... Fidelity Balanced. Fidelity Balanced. So it's Fidelity Puritan, which is a balanced fund, Fidelity Balanced, which is a balanced fund, and Fidelity Asset Manager 70%, which is sort of a balanced fund. Her overall asset allocation is like 60-something, 40-something, or 60-something, 30-something. But the reality is what you have is a lot of actively managed funds, and you've got funds that have high expense ratios. I would suggest that you consider liquidating all of those and going into index funds, index equity funds, and index bond funds. Go take our risk quiz.
Are talking real money.
Tom and I believe in helping everybody become a better investor. That's why we offer lots of free knowledge at TalkingRealMoney.com.
Your guides to a really great financial future. Tom and Don are talking real money.
You see that flashing light on your radio? No, it's not really a flashing light, but it means that we're having a flash sale. It's like the blue light special at Kmart. This weekend, we are giving you $10 off tickets to Retire Meet. All you have to use is the discount code FLASH, which you'll see a link on the page where you go to order them, and then type it in. Type in the discount code FLASH. You'll save $10, and this is one heck of an event. You don't want to miss it. Lots of retirement information. Just go to retiremeet.com, retiremeet.com.
That the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately, consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Vestry, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures. That's a wrap.